U.S. forces have carried out additional strikes inside Iran. Multiple cities were hit, including the capital. Explosions lit up the night sky. And whether you hold Bitcoin, Ethereum, XRP, or any other digital asset, this changes the macro landscape immediately. Crypto holders, pay attention. The environment we're stepping into is not the same as it was last week. The geopolitical temperature just rose significantly, and when global tension escalates, markets react. Welcome back to Reverse Crypto, where we break down what's really happening beneath the headlines. Not the emotional narratives, not the fear cycles, but the structural shifts that matter. If you value clear thinking during chaotic times, hit subscribe right now and smash the like button. It helps this channel grow and keeps you positioned ahead of the herd. Now let's talk about reality. The message coming out of Washington has been direct. The bombing campaign will continue as long as leadership deems necessary. There's no ambiguity. When asked whether further action would be taken, the response was immediate and confident. In the short term, that means volatility. There's no way around that. War headlines create fear. Fear creates sudden market swings. And yet, something remarkable is happening. Despite the global shockwaves, Bitcoin has held up far better than many expected. No panic collapse, no structural breakdown. That alone should get your attention. Why? Because capital is behaving differently this time. For the first time since early this year, Bitcoin spot ETFs just recorded a net weekly inflow exceeding $700 million. A significant portion of that demand came from institutional players, including large asset managers with deep pockets. Think about what that implies. Bitcoin is the most liquid risk asset on the planet. When fear spikes, it's often sold first because it can be sold instantly. But it's also the first asset large funds rotate into once uncertainty begins stabilizing. Larry Fink has described Bitcoin as a hedge during periods of currency debasement and instability. Investors don't buy assets like this when they feel safe. They buy them when they feel uneasy. And right now, there's plenty of unease. There are trillions of dollars sitting inside digital wallets globally. Stablecoins, tokenized dollars, and crypto liquidity pools continue expanding at record pace. The monetary base in the United States continues climbing, M2 money supply pushing past historic highs. Meanwhile, national debt expands literally every second. Liquidity isn't shrinking, it's growing. And that matters more than short-term war headlines. The strikes occurred over the weekend while traditional markets were closed. Stocks couldn't react immediately. Gold and oil will likely move sharply when markets reopen. That's typical behavior during geopolitical conflict. But crypto never closes. Bitcoin traded through it all. When everyone expects gold, silver, and oil to surge, sometimes the unexpected happens. Often the real move occurs after peak fear has already been priced in. The uncertainty was whether action would occur. That uncertainty is now resolved, and markets price uncertainty more aggressively than they price reality. Many traders are preparing for lower lows. They're expecting breakdowns. But what if the selling pressure has already exhausted itself? Look at the monthly candles. January closed red, February closed red. That's rare for Bitcoin historically. Extended red sequences are uncommon and typically precede powerful reversals. In past cycles, the longest streaks of negative monthly closes marked major bottoming zones. We're approaching similar territory now. Metrics across the board show oversold conditions. Not mildly oversold, but historically stretched. And here's the paradox. Despite war headlines, despite fear narratives, Bitcoin did not collapse. That tells you something. It suggests weak hands may already be gone. Let's zoom out further. There's another layer most retail investors are ignoring: regulatory clarity. While geopolitical headlines dominate media cycles, legislative timelines haven't disappeared. The White House previously set a deadline regarding the advancement of structured crypto regulation, specifically around market structure reform. The Clarity framework has been moving through legislative review, and behind the scenes, large financial institutions are positioning accordingly. Morgan Stanley has filed to establish a digital asset trust entity. JPMorgan has publicly acknowledged that regulatory clarity would accelerate institutional participation. Major players aren't waiting on perfect conditions. They're preparing infrastructure now. Why would they do that during geopolitical tension? Because institutions think in multi-year timeframes, not daily headlines. If clear regulatory pathways are finalized, It opens the door for pension funds, sovereign wealth funds, and large asset allocators to deploy capital at scale. That's trillions in potential demand. Kevin O'Leary recently suggested that once structured regulation is finalized, Bitcoin could enter a new price discovery phase, potentially pushing towards significantly higher valuations. Whether you agree with exact price targets or not isn't the point. The point is, infrastructure is being built. Coinbase leadership has expressed strong confidence that structured crypto legislation will pass. Stablecoin frameworks have already advanced. Market structure reform appears to be the next major step. Banks attempting to limit stablecoin yield may try to protect their margins, but millions of Americans now use digital assets. That voter base matters politically. Meanwhile, Ethereum has quietly been experiencing one of its most suppressed sentiment phases in years. 6 consecutive red months. That kind of sustained negative momentum historically precedes powerful reversals. On-chain activity is actually increasing while fees remain relatively low. Stablecoin usage across Ethereum continues exploding. Business to business, consumer to consumer, enterprise adoption. Ethereum's roadmap includes major updates: private transactions, quantum-resistant enhancements, scaling through Layer 2 networks, and full account abstraction integration. Vitalik has indicated native smart account functionality is on track within roughly a year. That upgrade changes usability entirely. BlackRock's CFO recently discussed plans to tokenize ETFs within a defined time window. For institutions of that scale, timelines aren't theoretical. When they commit publicly, execution usually follows. Imagine a world where traditional financial products are fully tokenized and operating on public blockchains. That world isn't 10 years away. It may be months away. Now consider liquidity again. Money supply expansion continues. Debt expands continuously. Rate cuts become more likely during economic stress. Historically, wartime environments often trigger fiscal stimulus and monetary accommodation. Short-term volatility? Yes. Long-term liquidity expansion? Also likely. Some veteran traders are anticipating a strong quarter close. Liquidity injections, regulatory movement, and technical setups align. There's a visible CME gap in the low 80K region. Weekly resistance levels sit between 82 and 86,000. A move of 30% from local lows would place Bitcoin directly into that zone. Will it happen immediately? Not necessarily. There could be chop. There could be shakeouts. Liquidity hunts are common in environments like this, but the broader thesis hasn't changed. Institutional infrastructure is expanding. Regulatory clarity is progressing. Liquidity continues rising. On-chain adoption accelerates. Weak hands appear exhausted, and markets love to surprise the majority. If you believe like I do that crypto represents the next evolution of global finance, not just a speculative trade, then moments like this aren't reasons to panic. They're moments to stay alert, stay rational, and stay prepared. Bitcoin and crypto may shock a lot of people this year. And on Reverse Crypto, we'll be here breaking it down every step of the way. Make sure you're subscribed, turn on notifications, watch daily, because what happens next, most won't see coming.